Hey, what's going on? Welcome back to the channel. In this video, we're going to take a look at Matic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. And also, if you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand side of the screen. So yeah, watch that so that you have more context. Afterwards, jump back into this video. I do want to say that I'm not a financial advisor. And yeah, let's start off with the daily chart. The chart is from Binance on TradingView. So we have a Fibonacci retracement set up over here. This is our local high and we have our local low here. Potentially this is the bottom of the bear market here for Polygon Matic. Obviously, if Bitcoin decides to drop down to $12, $13, $14,000, this all can change very quickly, and Polygon Matic can come back down even lower to 23 cents. So that is yet to happen, and we don't know if that is going to happen. Now, what I can tell you is that we do have a very nice zone where we can expect the price to bounce from, at least. So anywhere between 58 cents all the way down to 50 cents. This is going to be a very important zone because we do have this zone retested as resistance before. We have retested it as support. And right now, if we do end up coming back down there, we may end up retracing to this place, to this zone, and that's going to be our next bottom. So essentially what's going to happen is you're going to create a higher low, right? If you come back here. And that's going to be very positive because creating higher highs and higher lows, that's how you start an uptrend. And that is essentially what an uptrend is. So the key thing here is we don't want to lose the June low. If we do, you're going to have more targets to the downside. Like I said, 23 cents, 20 cents, and 15.5 cents. But that is yet to happen, and that's a very bearish outcome. Bitcoin would need to drop very quick for that because altcoins will bleed even harder. So that is regarding this smaller Fibonacci retracement that I have. We can actually extend it a bit more just so that the levels don't overlap with this larger Fib that I have. And if I zoom out, you can see that I have a larger Fibonacci setup. So in this one, we have the swing low over here. So this is going to be June 17th. And the swing high is over here, and that's December 2021. And I've done this because we assumed that this is our low, right? So this Fibonacci works if we assume that the June bottom is the low that we're going to print and we're not going to go any lower. In that case, we're going to be looking at $11.50 per Polygon Matic coin in the next bull market. That is going to be very possible. And yeah, so that's just how the Fibonacci retracement works. If you've been watching my videos for a while now, you know that we use the Fibonacci quite a lot. So if you start breaking the first Fib level, which over here is $2.92, essentially the all-time high for Polygon Matic. If you start breaking that, you're going to be in a technical target to the 1.618, okay? And by breaking, I don't mean just, gradually wick above and come back down. No, you have to come back above that level, solidify, back test it as support, continue on, take out other targets, and that's when you're really going for the 1.618 because your minimal target is going to be the 1.272, which is the green trend line here. And that's at $5.33. But with all the partnerships that Polygon Matic has been acquiring in the past months, I just think that there is very little chance of this project failing, right? And that's why I'm very bullish on it. I haven't been buying ever since we had this huge pump. I haven't been buying back into Polygon. So my average buy-in price right now, I believe, is 44 cents. And as always, all of my buy alerts are going to be on my Patreon, along with all of the other stuff that I drop in exclusively for my patrons, including low cap gems and podcasts. So this is regarding this larger Fibonacci retracement. If you're going to be going off of the larger one, then you have a golden ratio at $1.25. And we still haven't retested that level. That potentially can happen if we see some sort of a relief rally before spring. because I'm expecting a little fake out to the upside before spring. Then we capitulate one more time in December, January maybe, and from spring we start creating higher highs, higher lows into August next year. In August, that's going to be our local top. Then we're going to have another correction, and we're going to enter the bull market with the next halving. At least that's my theory. That's what I think is going to happen. I might be wrong. I probably am wrong, but that's just what I think is going to happen. So you have the $1.25. Above that, you have the 0.786 at $1.82. So that's going to be another major resistance level for us to break. And obviously the all-time high at $2.92. So all of these levels are going to be important resistances for us to break. They can be nice take profit zones. For example, if we see a relief rally towards the golden ratio in the next couple of weeks, then I would say it's a good time to take some profits at $1.25, and you can just buy back in at 75, 80 cents. You know, swing trade. That's what we do here on the channel. Obviously, never force a trade. Never force a trade, because if you want to swing trade and you can see that the price is stable and it's not really going anywhere, it's staying on the same place, and then you start selling, most likely the price is going to start pumping within the next 5 minutes. So just never do that, okay? Always swing trade when an asset is overbought on the 4 hourly, on the daily, when the RSI is above the index of 70 all the way up here, okay? That's when you want to be taking profits and buying back in once you come back down. So what's happening here is that we're breaking out of this yellow symmetrical triangle. We bounce off of the white trend line as support. So potentially we could see a retracement all the way up to 67.6 on the index. That's going to be our mid-term target here for the RSI on the daily. That could be a nice little signal for us to take some profits, because looking back historically, you can see that you have multiple rejections from this level all the way back here in December and October last year, and we have one run-in with this level in August this year. So that's why it's really important. And then we have these two upward touches of the larger resistance zone I have above. And that was retested in October, and that was retested in July as well. So that's all I have for the daily RSI. Obviously, you can extend this yellow support trend line of the falling wedge, because that is an important level for us to hold. I told you to target this trend line, guys, because we did have two touches over here. Let me get the arrow. You had one touch there in May. You had another touch here in June. And I told you that we may have another touch in September, October. We did have a little fake out down below, and that was a great buying opportunity. And if you did that right now, you are in profit. So just extend the yellow trend line further and, just target that for entries. If we lose that, what you can also do is extend this trend line here, because it's still a valid trend line, even though you're breaking out of a technical pattern. These trend lines are still valid levels, because you still have, first of all, you haven't retested this upper trend line as support, so we're still looking for that. We may very well do something like this and then come back down and retest this as support. That is very possible. So be on the lookout for that. Don't delete the trend lines just because we broke out of the pattern. That's a very important thing to notice. And I do want to switch over to the Binance website. Okay, moving to the weekly chart. So if we jump into the RSI on the weekly, you can see that we're breaking out of this falling wedge that we have. And if I draw a falling wedge here on the price action, you can see that it looks like we're breaking out right now, slightly breaking out. If I switch this up a little bit here and make it look more proper, then you can see that it does look like we're breaking out of this falling wedge. So this could be the start of a nice move to the upside for Polygon Matic, because if we break the 20 EMA, if we start breaking above the 20 EMA and we start targeting the 55 EMA on the weekly chart, that's going to be very bullish, because you want to look for the bullish cross on the weekly. Right here, you do have the bearish cross. As you can see, that's where the EMAs crossed. And you want the opposite here. You want the 20 to cross the 55, and you want that bullish cross. That's going to be a very nice confirmation on the weekly chart for Polygon Matic. And at that point, I would say it's very safe to be investing. Well, not safe investing, I know how that sounds, but after we get these bullish crosses on the weekly chart, typically we are in for a nice treat. Okay, and switching to the stochastic here, I have it set up as 2833. This is not the stochastic RSI. This is simply the stochastic or the stock, so don't confuse it with the stock RSI. And we are recovery. We're simply in a recovery phase right here. We can see a potential reversal midway through and come back down if we see another correction in January. But the last time we were up here was in November of 2021 and in May of 2021 and in March of 2021. So the next time you're here, that means that that's your local top and you're eventually going to start coming back down, and that's when you want to buy back in. So just keep this in mind, have this opened up. Like I said, here are the settings for my stochastic. You can stop the video and take a look at those. But yeah, that's pretty much it. This is everything that I wanted to cover for Polygon Matic. If I missed something important, let me know down below in the comment section. Feel free to follow me on Patreon, feel free to follow me on Twitter, and I will catch you in the next one.